Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, today we're going to talk about a few things that I believe everyone needs to know what's going on with the market, whether you are an investor, swing trader, day trader. You just need to know what's going on, all right? So let's get right to it. Listen, make sure you don't fall for any spam below anywhere. Either spam here, never send money or crypto to anyone. I do not do any personal money investing for anyone else. Anything I say is not a suggestion for you to buy, hold, or sell. Let's get right into it. Okay, you guys know that today is one of the last days for the 16 free stock. Okay, you got to have it done today if you want the 16 free stock. Click the third link below in the description and get up to 16 free stock. All right. So make sure you do that. That is moo. Okay. Let's get right into it. We have some important data that came out today. We have PCE and consumer sentiment. Right. The consumer sentiment and the PCE came out today. Now, you may say, hey, what is that? It sounds like blah, 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 blah. But if you are making money or losing money in these markets, these are some of the data points that you need to be aware of. Okay, so let's just go right into it. Right, look at these headlines. S&P turns lower on Friday and now is in correction territory. We are now in correction territory on the S&P 500. Okay, so let's just take a look at it. Here we are on the S&P, and now we are in correction territory. Correction territory just simply means that it's a 10% pullback from the highs. Okay, so a 10% pullback is we are now in correction territory. All right. And so as we could see today, we're right here at 41.13. So it is definitely a pullback. Okay. So that's correction territory, anything that's 10% or more. So the S&P, the NASDAQ are both now into correction territory. And, it's just something to keep an eye on. The market is correcting. I'm going to say something that's going to sound gross, but it's a good way for you guys to understand it. You can't keep eating until you take a dump. The market is the same way. All right, good people, let's just keep it moving. It's the truth, right? It's the truth. It's unhealthy, right? And then you're bloated and you're wondering why and you're having problems. That's what's happening with the market. These are some of the headlines, all right? So the S&P 500 is in correction territory, right? Right under that, Barings, let's read that. Stock market today, Dow's slips, right? But in the pre-markets down there beneath Yahoo Finance, stock market news, U.S. futures rise as Amazon shines, key inflation data ahead. And as we could see, the NASDAQ is pretty flat today. The Dow is down and the S&P, are all down today. You know what? We know it's Friday, good people. It's Friday, right? What does this market do when there's negative or positive news sometimes? It's Friday. It's generally a sell-off, okay? So let's go to the consumer sentiment, right? Look at this. Consumer sentiment improves, but higher gas prices and falling stock market adds to angst, all right? And so as we can see, Americans think inflation will rise 4.2% in the next year, right? Not fall, but rise. That's what the consumer sentiment says, okay? So it improves, but there's still doubt on the floor, right? And now, what do we have coming up? We have shopping, right? The retail. Retailers are betting on, do you guys know that most retailers don't make money until the fourth quarter? Like the first 3 quarters are just paying bills, and the fourth quarter is when they make their money. And so that's why we need a strong Christmas rally. We absolutely need a strong Christmas rally. So middle working class is spending less, right? They have less disposable income. The upper class, the wealthiest Americans, are actually starting to curtail their spending, though they are what's holding this market up. but they're starting to curtail their spending. And even on luxury brands, luxury cars, luxury purses, they are starting to cool off, right? And so that's a sign. Working class, we're spending all our money just to, put meat on the table, keep our houses warm in the winter, cool in the summer, and take care of the kids, right? And so that's what's going on with this economy. That's not good because we need the middle class to be healthy, right? And if we don't have a healthy middle class, then we're doomed. We're doomed. All right. So then we had PCE. PCE came out this morning, as you saw, in the pre-markets. And let's listen to the PCE numbers.
Personal income 0.3%. Becky, that's a miss on the 0.4 that was expected. Expenditures, wow, big jump there, 0.7%. That's above the expectation of 0.5 on the important price indices. Headline at 0.4 and ex-food and energy at 0.3. So that is right in line. That's the core that people are interested in. Year over year, the headline does tick down. It looks like 0.1 to 3.4%, and the core just 3.7. So that is exactly in line. Really in line numbers, Becky. There had been some talk about whether or not this number would show something of a tick down below expectations because of the data yesterday, or the positive core PCE data in the quarterly GDP report we got yesterday. That was not the case. A touch light on income. I've got to figure out where that came from, but the spending number was strong, and I'll have to look. My guess is that the personal savings rate, yes, it did. I guessed right. It fell to 3.4%, running well below the average of 5%, 5.2% is the average of savings over the last several years. It is down. People are running or using savings to keep up with their spending. Whether or not that's a smart choice or not, I guess that's up to the folks that are doing it. Prices for goods were up 0.2%. Services, a strong up 0.5%. And one of the things we'll be doing as the morning goes by is calculating that super core number that Fed Chair Jay Powell looks at. That had been very, very well contained, 0.14%, but I don't know what it is in September yet because we have to calculate it. Becky?
So the truth is, people are forced to tap into their savings just to keep up with inflationary costs. Let's go over these numbers again. We got PCE, personal income. It was expected to be 0.4, but it came out at 0.3. Personal spending was expected to be 0.5%, but it came out 0.7%, right? Then core PCE was right in line, 0.3%, and it was expected to be that. Core PCE was right in line, 3.7%, and it was right there. But the consumer sentiment was expected to be 63.0, and it came out 63.8. Now let's move on. I bought some more Alphabet, aka Google, and I'm going to share with you guys why I bought more Alphabet. I'm adding it to my $5 a day. So for those of you, I want to talk about that, and I want to talk about some day trading things. All right, let me just go through this really quick. So I bought more Alphabet today because, for those of you that are following the $5 a day challenge, meaning whatever your $5 is, it may literally be $5. It may be $50 a day. It may be $10 a day, whatever you can afford according to your income level. Now, the reason why I bought more Google today is just in a good range for me to add to my $5 a day, but I didn't just go to and add $5 a day to my $5 a day. I bought a bigger chunk, and here's why. Remember, anything I say is not a suggestion for you to buy, hold, or sell, right? Let me blow this up a little bit. So let's go back down. 6. There we go. All right. So here's why. And you let me know what you think, okay? Now, the biggest mistake that people make is they try to get the bottom, guess the bottom, right at the bottom. It's just not a wise thing, okay? Good luck with that in your crystal ball. It's just not me, right? So I don't mind adding to some positions right now, even if I think they're going to go a little lower, then it's okay. I can just buy more. So I didn't just exhaust all of my cash. So as you can see here, here's one of the reasons why I bought more. Here's some key things that happened, all right? So as you can see, this was May 11th, right, of this year. And what? Alphabet shares jump after AI, right? So this was the AI focus that made it jump, right? So we're right at 120. My average right now, where I'm at 120, right? And so here it came back, and then the next jump was, here we go. Alphabet shares jump on beat and strong cloud growth, right? And so here we go again, boom, right? But this time, boom, here we got good YouTube, but weak cloud growth on this quarter. But as you could see here now, the price is right back down to $123, right? So we started around 120, then we're back at 122-ish, 129, and then right here, right? And so it's not that big a move up, but it was a pullback of about 12%, as you could see here. So that's in the last, even in the last week, it's been a pullback of 10%, right? And then let's see, let's go to the month at 6%, but a pullback. And it's just a good position for me. I believe that they're going to get their cloud under control. I believe that YouTube will continue to grow. I believe that Google is going to kill it with AI down the road. So I'm adding to my positions there. You guys let me know what you think. And lastly, before I get to the day trading, I want you guys to also make sure you check out Stock Up You. Stop losing money, start making money. Spend hundreds to make thousands. Let us teach you the correct way to enter into this market, okay? And if you're a pro investor, that class is not for you. But if you keep losing money and you've been investing only the last 5 years, then you need to take that class. That's going to be the top link below. Now, let me talk to some of you guys that are new into day trading or swing trading. I will tell you this, and especially for those of you that are new to this market and you are in the Patreon, I want to say this. Listen, if you see that you can make $100 a day, for those of you that's trading every day, or you can make $100 3 times a week, right? If you're limited to 3 trades a week, the way around that is to get another broker. Now you have another 3 trades. You can do that with Moomoo, okay? Third link below. But if you see that you got 3 trades a week and you could make $100 a day, right? Some of you, that's $500 a day. Some of you, that's $1,000 a day. That depends on your trading level and how much money you have. It's just those simple 2 things. But if you see that you can easily make $100 3 times a week and you try to make $500, but you keep losing, then go back to the strategy that makes you the 100 a day. Follow? And just be satisfied with that. Put less money at risk, especially in choppy markets like this. It only takes discipline. Warren Buffett, again, stock market is a tool that's used to transfer money from the impatient to the patient. So that takes patience. I know you had some good wins and you had some fire plays, and now you think you can 10x it. That's going to help you lose your money, okay? So I want you guys to be patient and just do that for the next 3 months. Just limit your risk and limit your wins. Limit the size of your wins and limit the amount of trades that you actually take. And watch and see that you're not more profitable and you are losing less money. That's the lesson for today, all right? I want this to simmer all weekend. I hope you guys stayed to the end. If you haven't, make sure you hit that like, subscribe, notification bell. Make sure you select all. And please do me a favor, if I've made you $1, please continue to share this page. And for those of you that are new, welcome to the family called Stock Up. Stock up with Larry Jones. I was going to say stock up you. All right. Speaking of stock up you, guys, go ahead and check out the links below. It's been one of those days. I love you guys. Have a blessed weekend. Live, love, laugh, and learn.